And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. And it's another beautiful day out there, and I'm going to get right into Bitcoin's price action, what the markets are likely to do based on the current trend. And first, I'm going to dive into a little bit of NASDAQ here. And what do we have here? We have this massive trend line coming all the way back from April 5th, 2022. And what's going on there is that essentially we're having a retest of the trend line. And the big question is it going to break? Is it going to break, right? And here's what I would say. Let's look at trend momentum and volatility. So we're going to have 3 drives of bearish divergence. It's already confirmed, actually. In fact, for me, on my end, that's 1, 2, 3 lower highs in comparison to 1, 2, 3 higher highs in price. So price is making lower highs and RSI is making higher highs in the context of a downtrend. That is enough to give us a drive to the bottom side of the range, coming in at 11,950. Now, if that does break 11,950 to the downside, I'm looking at a move all the way down here. So as Stokes crossed down on the daily time frame below today, below 11,860, and I don't think that'll come. I mean, tomorrow, maybe that will happen, but that's a measured move down to about 9,500. And let's see if that's in line with any of our other. So that would take out our last kind of levels of support here. So that's going to look really bad. And that's right in line with this last prior high here. And just to give you all a little bit of a reminder here, for NASDAQ to come down to the lows before the coronavirus, let's see, let's measure this out from here. Yeah, that's about 42%. That was going to be March of 2020. So yeah, that is when the coronavirus hit last year. Oh, we had a great trade. We shorted the market. Congratulations if you got in on that one. But yeah, so what I would expect is as momentum crosses back to the downside, volatility ticks up, we do get a massive leg down, And at some point, we are going to create some hidden bullish divergence, which is when price is making lower lows and RSI is making higher lows. And you can see all the way through here, providing some nice bounces. But in general, that is the next target, and we could use a Fibonacci retracement to kind of put that in force. So I'd say small stop at 10,600 with a small bounce there, right? Probably a bounce back up to 11.5, and then retest the support line here somewhere around there, and then I do believe we will carry it downwards. Now, the big question is, what's going to happen, or why are stocks down in the past couple of days? Nope, I don't want that. Why are stocks down in the past couple of days? And I'm just going to reiterate what we spoke about yesterday, which is, this. It has to do with the numbers coming out this week because it's going to give us a picture of why stocks are crashing, right? Bitcoin, why is it crashing? It's correlated to the stock market. So what it is, we've been saying this for many months, is CPI is projected to come out the worst in 40 years. The worst in 40 years. And yeah, we said the same thing last month. CPI came out at 8.6%. The markets are now pricing in inflation at 8.8%. And that's based on the Bloomberg consensus, whatever those people are over at Bloomberg. I don't trust them, frankly, because we all know inflation is not at 8.8%. It's not at 8.6%. It's more like 20% right now. If you look at food and gasoline and prices that, home prices, things like that. So month over month inflation is coming in at 12% for this year. So if you have 1%, if you're getting 1% at the bank and inflation's at 12%, how much are you really making, right? How much are you making? you're not making anything. In fact, you're losing, right? It's called a negative rate of return. So if the bank's paying you 1%, inflation's at 12%, you're really losing 11% of your buying power. Why do they do that? Well, they want to stimulate the economy. They don't want you to keep the money in the bank. They want you to go buy stocks, go buy something out there, invest in something. And that's the problem, is everybody is heavily invested in the stock market right now, and they don't know how much more downside we have in front of us. And I'm going to be putting out a macro video later today, hopefully, that goes over some of those downside targets. But again, the CPI data is going to come out tomorrow morning at 5:30 a.m. And if it comes out hotter than expected, like 8.9, I mean, markets really get killed. If it comes in right in the line with expectations, we might see a little bit of a bounce, but still, it's the highest inflation report we've seen in 40 years. So I would expect the market at some point to pull back even more. And in fact, that is what we got right now. Markets. So why else are the markets pulling back? Again, fears of this high inflation number are here. And then you got PPI on the 14th, which is the day later on Thursday. And that is, PPI is Purchaser Price Index. Basically what we're buying, and that's at 10.6% for the year. So that, coupled with the US dollar skyrocketing to the moon, which it's pretty interesting. The US dollar and the euro just coming in, and the market is getting a little bit of a relief bounce here. As you can see, Twitter up 3%, Meta up 0.5 point, US 30 up 0.18. Gold still down, silver still down. But here's the euro, and the dollar just went to parity. 106. Yeah, we got to parity. $1 and €1 equaling the same thing. Why is that significant? Well, it hasn't happened in 20 years. And I do believe we are on the brinks of a completely, a new world order. Probably World War III at some point. Don't want to sound a little bit crazy, but when some of the bearish things, notably this guy right here, NASDAQ, and I'm going to actually pull up NDQ real quick. NDQ. And see if I can get an old chart. I don't want an index. I want this. Let's see. Let's see if that does the trick. Will that take us back to 1929? Because that's what we really want. We want to see, what does this thing look like going back to 1929? Nope, this only goes down to 2003. But you can see the 6-month bearish engulfing here. That was in 2008, the financial housing crisis, and the Dow fell from 14,000 to 6,500. NASDAQ fell from this guy right here, down 69%. So to give you an idea, where does 69% from the high come in? If we just have a similar correction, that means we got quite a bit more left to the downside, another 50%. But I'm going to line that up with some other charts that go back to 1929 that covers the crash in 1986 and 1929, because that's, I believe, what we have going on here. This is a parabolic blow off top. Kiss your stocks goodbye. Wake up and smell the coffee. Don't get stuck hodling your bag. Again, this isn't a financial advice. I'm not a financial advisor. I'm just giving you what I'm looking at on a macro schedule here. And I'm not going to fluff you like the rest of the people out there that are all talking about Bitcoin going to 250,000 or 100,000 by the end of the year. It's just not happening, guys. So I hate to break it to you. How do you take advantage in a bear market? Well, we go over that in our channel, and hopefully you'll stick to the end of the video. I'm going to leave a little bit of a kind of a special intro to the beginner's guide to trading cryptocurrency at the end of the video. All right, jumping back into it on the shorter term time frames, we are in a 4-hour right now. Stokes are extremely low, and I was expecting a bit of a bounce here. I don't know if you saw yesterday's video, but I did say, based on the weekend's video, that, hey, if we broke 21,100, we were looking for a quick move down to 12,500 with a small bounce and continuation down to 19,900. That's exactly what we did, and we're getting a small bounce. And I think a bounce could come up as high as 20,400. We are going to be confirming a drive in the next 10 minutes of what's called bullish divergence, when price is making higher lows and RSI is making lower lows. And that's only going to be one drive. So I'd expect, typically one drive gives you a move up to the 9. So what else could happen here as we're coming into that inflation number tomorrow? And a lot of people are concerned, hey, is the Fed going to pivot because the economy is in shambles? I don't think it's the pivot is yet. The pivot might come up, towards the last quarter of this year, but they're going to have to, bring markets down, slow spending to slow inflation, right? When everybody feels poor again because their stocks are worth half, right? Then they're going to stop buying that extra trip to Cabo, that extra Ferrari. People, when they feel poor, they're going to spend less money, and that's going to create less dollars chasing the same amount of goods, and prices should come down for inflation. That's what the Fed is doing right now, in my opinion. But we are going to have Stokes cross up from a very low level there, and that should provide at least a bit of a bounce up to the 9, if not up to the 21 here. And so based on the 3 drive philosophy of, bullish divergence or bearish divergence, again, this is hidden bullish divergence, not confirmed yet, but 1 drive. So if we were going to get 2 drives, what would that look like? Well, what we'd want to do, if we're not going to take out this low, which if this area breaks 19,500, I'm expecting a move down to 18.9 with a small bounce and continuation down to the bottom side of the range at least 18,000 to 17.6. I don't believe this level will hold. And, Bitcoin has much been range bound. So that's the 4-hour. What else was a big tip off yesterday or over the weekend when the 12-hour Stokes crossed to the downside? As you can see, these things have been very, very accurate, crossing to the upside and to the downside. Very, very nice play. This is our momentum indicator. So on a higher term time frame like the 12-hour, and if we do get a tick above here at 20,054, I would expect that, move to come somewhere around, 20,100, 20,200, maybe all the way up to the 9 exponential. But overall, when you have momentum to the downside and you've got volatility increasing, could we get a drive of bullish divergence? Yes, we could, but this is not confirmed as a local low, as we'd need to close a 12-hour above 20,073, and that would confirm just the first drive. Okay, on the daily time frame, Stokes are crossing down. Volatility is kind of neutral here. And I do believe we got just another weak bounce off the daily time frame. And if we pull up our fibs from the high to the low, not even using the wicks, we are stuck below the 236, which is showing that this bounce is extremely, incredibly weak. And the more touches to a trend line, the weaker it gets. As I said, usually, 3 touches to a trend line is okay. So, could we get one more bounce? Yeah. But based on the last few Fed meetings and the announcements that we saw, and the bear moon, which we've been talking about, I'm just going to pull that one up again. Moon phases on the daily time frame. So we had the bear moon. That has resulted in the last few moves, 40% downside, almost. Let's measure them out again. I'll go back to here. So bear moon. And look, the bear moon, just ticked off and went down immediately. So we'll just take it from there to there. That was a 32% move. This one was a little bit late. So anyways, I'm not going to measure that one. That one, this was the last major one here. And again, it's not going to work every time. That was 43% to the downside. This one is going to be, here's what I do find, that was 43% to the downside. Here's what I do find interesting, though, is that, let's see, how many days after the signal went? 1, 2, 3, 4, 5, 6, 7, 8, 9. So call it 8 days after. Okay. Let's see where we're at. Moon signal goes off. 1, 2, 3, 4, 5, 6, 7, 8, 9. So was that the beginning of the big, massive leg down? Right there, coming in 8, 9 days after the moon? Maybe. Maybe it is. Maybe it's not. But we will be lining that up with some of the other indicators going forward. And yeah, I think that's going to be it. What else that I want to remind you guys is if you go to our YouTube channel, and you go in the description, what's going to be there? Right here, I'm going to go in the description, and I'm going to show you. In the description, I am doing on Thursday, July 14th at 12 p.m. I believe it's Central Time. I should write that in there. Central. There's a free beginner's guide to trading crypto, how to take advantage in a bear market. I recommend you sign up. All you got to do is click on this link here. And I'm going to be hosting this with a good friend of mine named Sunny. Sunny for the money. It's a free crypto class. I hope you guys sign up and join us. We're going to do a nice little Zoom call where you can ask questions and begin to get some basic understanding of technical analysis. Okay, that's going to be it for today, guys. I think that's it. Bitcoin, you know our targets. Where does this get invalidated? And yeah, this is the last chance for the bulls, really. I mean, this is it. This trend line right here is it. Okay, this is a ascending triangle. Typically, these break to the upside, so point for the bulls, right? But the measure move off of this guy on a wick basis is going to be like this. Boom, right there. And let's see if that lines up with any fibs here from the low to the high. What do you know? It's pretty darn close. Close enough is close enough. And that, you know, we probably get a short-term stop here at 16.5 to 16,000. You know, more conservative targets coming in at 17.6, just the bottom side of the range. And I believe that's probably more accurate if we drew it like this, right? And boom, boom. Yep. So could we get a little wick down there? Sure. But ultimately, continuation to the downside. And this has been a range for, you know, quite some time. So maybe we could even say, hey, with the break of this guy at 17.6, we're looking for a move down to 14.6. Ultimately, I do think this one's going to get tagged here at 10,000. And I don't know if we need to drag the fibs off of this massive consolidation, but I don't. I think that one, that puts Bitcoin down to 4,600. So there is a target there. And I do believe if we do it based off of this high to low. Nope. Is it this one? Yeah, that gives us, yeah. So from this high to low, and we did get a bounce up, so that would be on a bearish retracement to the 618 and back down to doggy town. So yeah, some serious things on the board today, guys. Hope you guys are taking this all with a grain of salt. Always have some kind of a trading plan. Don't play around with this at home alone. If you do want to put Bitcoin or cryptocurrencies in your IRA, we do have a safe, simple solution, a custodied solution that's 100% insured by Lloyd's of London, where you can diversify part of your old 401k or your IRA or your Roth IRA and then begin to grow that wealth tax-free. Instead of doing it on Coinbase, where they're in bed with the government, they are not trying to help you, they're helping themselves, and there's no customer service. With us, you actually get to pick up the phone, you can talk to a Bitcoin advisor. Again, we aren't a financial advisor, we're not giving financial advice, we're just talking about magic internet money here. All right, that's it for today, guys. Have yourself a blessed day. Take care.